I'll be right back over to you, Dan. Even if you're constantly optimistic and nodding, I'm going to have to point one thing out. You want to charge $75 for Paler. That is below the trading level of the stock. The street is lower than it. The street is at roughly 45, but it doesn't appear that this stock will rise above its current level. Our bull case is 100, for example. However, as we discussed with Paler, they detested the beginning of the year as teenagers and the conclusion of the year as seniors. And free money alert, I think, Frank. Get $250 when you sign up for Toro and deposit any amount. Click the following link. This may be the time to predict who will be the next oracle in the next 5 to 10 years. Paler, I believe. They are the Messi of AI, in my opinion, because this is only the beginning of the direction that Paler is taking the AI revolution. And if they keep performing well, you might be able to defend a much higher stock price. It's a get-out-the-popcorn moment for Karp and Paler as they enter 2025, in my opinion. What does that signify? In comparison to your price target, is 100 your bull case? The way we've done it, Paler, we see it as a base case and a bull case, and as they execute, you may eventually lift the price target when they present the numbers. Paler, in my opinion, has to be displayed as a sort of range, including base and bull case. And if you think the bull case is 100, should investors be increasing their positions at present levels due to the beta, or ought they to pause? It's an excellent question in light of the stocks. Since I think AI is going in the wrong direction, we think this is just going to be a table pounder. Because when you think about it, and Alex, you know, is really knowledgeable about AI, I believe that if you really see where this is going with AIP, this stock could be many times higher than it is now, which has been our call all year. It's a table pounder, and this moniker, in my opinion, still serves to support its value. Paler's entry into the commercial sector and collaboration with private enterprises is one of the factors that have contributed to its rise. Hey Alex, however, I would like to return to you. How do you feel about this consortium's efforts to enter the defense industry while discussing Paler, SpaceX, OpenAI, and Anduril? Do you think these companies, Paler already has a strong defense business, represent anything in the new, quote-unquote, defense industry as we move ahead into 2025? In my opinion, it's a very remarkable chance. In many ways, this is how America will recruit the greatest and brightest technical minds to develop technologies that can be widely used to combat our enemies. Paler's role involves organizing all of these things and acting as the glue that holds everything together. For SpaceX, it obviously means establishing dominance in space, and of course, Anduril's supremacy in the drone market. Additionally, it entails using the greatest AI models available to OpenAI. Since you currently have a strong understanding of the startup ecosystem, Alex, I'm interested in knowing what you anticipate from the IPO window in 2025. What has historically kept founders and companies on the sidelines, at least in recent years, according to your conversations with them? And do you believe that will change in the upcoming year, especially with regard to some of these domestic AI firms that the bid has been genuinely awaiting for some time? As we've seen in the past, I believe that the best businesses don't need to go public. The best listings of the future, in my opinion, will be driven by the same thing that propelled the direct listings of the past. And the biggest, best, and most successful tech businesses in the world today will go public according to their own terms. And because they will be so successful and producing so much money before they list, they might even be effectively underwriting their IPOs. Let's click on that again. Which names, in your opinion, might fall short of some of the high standards that are out there? Nvidia, which has been erratic lately but is still up over 180% this year, comes to mind. However, our earnings are scheduled for mid-February. Although it still seems a long way off, investors are already getting ready for such a well-known brand. Indeed, that's a really important argument, as folks ought to be aware that Nvidia doesn't have your quarter end on December 31. Yes, they will go beyond that in their upcoming quarterly release. However, I think it's funny that many think Nvidia's stock is extremely overvalued because it tripled in 2023 and is aiming for a triple this year. However, their income has increased even more quickly. You have a stock that is currently trading at about 30 times earnings, which is likely to increase earnings by another 50% this year. Although I'm not sure what they'll do in the upcoming years, I still believe there will be significant development. Therefore, Nvidia is arguably a better investment during any drop, which always occurs, rather than today or tomorrow. Based on PE to growth and the PEG ratio, I would think it makes sense. It isn't costly at all. Considering what Broadcom is trying to collaborate with the hyperscalers and create their own specialized chips, do you prefer them? Great question. Great question. In order to confront that situation and embrace that subject, I have owned both Marvell and Broadcom, and more recently, I have purchased both. Both of those companies' sales as a percentage of total revenues have increased significantly as a result of their impressive upside. Indeed, it is evident that the hyperscalers are somewhat irritated by the tens of billions of dollars they spend annually on Nvidia's GPUs. Thus, they're putting a lot of effort into creating their own in collaboration with Marvell and Broadcom. Thus, I do own Marvell, Broadcom, and Nvidia. To further address the issue, I also own TSMC, which makes me feel good. It has performed admirably in 24. In fact, I believe it's a trade that will be profitable again in 2025. It's far too early, not just too early. You know, I'm still holding out hope for some use cases of artificial intelligence that can be made profitable. Of course, in many instances, that hope has not yet come to pass. We'll see what transpires. However, I did enjoy Google's introduction of the Willow chip in terms of quantum. Technically speaking, it has had some excellent benchmarking. However, the theme that we are discussing is likely to last much longer than a few years. As a result, I am the owner of Google, but for other reasons. This is merely the cherry on top. However, I believe that these pure plays in quantum computing are likely positioning themselves for better short candidates than long candidates. All right, so you dislike the names associated with quantum computing. What are investors expected to do, though? Continue using the magnificent 7 names that keep coming up. Furthermore, many of these businesses are not anticipated to generate the same rate of profit growth as they have in the past when we look at forecasts for the upcoming year. Well, I only like 2 of the Mag 7. Right now, I only like Amazon and Nvidia. For a variety of reasons, including valuation in some cases, I am the owner of the other names. I will not be purchasing them with new funds. As a result, even among the names of the megatrends, my list has become smaller. In addition, there are other concepts. However, quantum computing is still a long way off. All oak, other chances? Additionally, since there will likely be some volatility when these companies report their December quarter in the coming weeks, other opportunities will present themselves. Opportunities are likely to arise during the 3rd and 4th weeks of January, since some promising long-term stories will likely let us down and produce some volatility on the downside, after which we can buy some of their stock. Final transactions. I'll start with you, Josh Brown. My intention was to bring up IEO. Energy was one of the few things that didn't work this year. I stay a long time. That was fast, I see. You're next, Kevin. I would add to Amazon using pullbacks. In 2025, I believe it will still be effective. The story is not limited to AWS. Have the final say, Jenny. All right, a 7.1% dividend yield for Sabra, SB. For certain businesses, the aging of 65-year-olds means different things. But for skilled nursing and retirement, everything is well. Yes, Albertsons. You might not be particularly hungry, but the grocery shop is yielding over 8% on a cash flow basis, selling at less than 9 times forward profits, and paying out a very respectable dividend. Courtney? Goldman Sachs. We have discussed the banks, and I believe that next year we'll see a rise in M and activity. They stand to gain greatly. A portion of that is what you want to make sure you have. Steve? Uber. The stock is currently at its typical bouncing point. Uber. Don't pass this up. Sign up for eToro today, make any deposit, and get your $250 bonus. Below is a link. If you want any additional revisions or modifications, please let me know.